And let's start off here with their pricing strategy, which I guess is keeping ridership up, but you do kind of wonder longer term here how that actually affects profitability.
Yeah, I mean, look, miracles do happen. And I think that's what finally we saw with Lyft. I mean, this has been a disaster, really for the last 2 years. I think Mandeep hit on great points here. That said, it's a major step in the right direction. You got a new CEO actually running the place. So strategically, how sustainable is this? That's going to be the big question. But profits, can they do this profitably? That's really going to be front and center. But no doubt, this is a big step in the right direction after what's been an epic disaster the last few years.
I am curious as to whether you see any opportunity for differentiation. I mean, we kind of talk, I don't know how it works in other parts of the country, but here in New York, I mean, people kind of play that Uber Lyft game where you kind of look at both apps and see which one is going to offer you better times and better prices here. I mean, what becomes the value proposition for Lyft from a customer perspective?
I think Lyft a lot of times viewed as the low-cost alternative to Uber. I mean, really viewed, I think, in some ways as the little brother to Uber. And I think that's something that they need to really focus on here. Is how do they go for peak ridership, longer rides in terms of rides, what they're getting revenue per customer. They don't have any sort of, when you think about what Uber has, many other levers. That's not what Lyft has. It's only domestic. And that's one of the challenges, especially on promotional pricing. And I think Uber's gaining more and more share. And I think it just shows in what we're seeing with more going to the office, more traveling, it's an opportunity for Lyft. But finally, you have adults in the room, and you actually have a step forward for what's really been just a massive headache for any investor that's come near this name.
Dan, is there anything that Lyft does that's better than Uber?
I mean, quite frankly, no. Now, for them, it's all relative, right? I mean, going into this, many were really wondering, do they put a for sale sign on the line? Strategically, what do they do? What are the options back against the wall?
Yeah.
That said, they can be successful if they execute. But if you look what Dara and Uber's done, it's been a clinic relative to execution. I think Lyft finally starting here, maybe a little step in the right direction. But I think, as Mandeep talked about, this is not a turnaround yet.
Yeah.
But at least now maybe some green shoots.
Well, there are some assets it has, although it's not helping the bottom line. Lyft owns a bike and scooter business, which includes the popular city bikes that Romaine rides. And it says it has received interest from others to buy or part of it or all of it. What's the optimal play here for Lyft?
I think strategically they sell that business, depending what the price is. I think that's important in terms of what they could do, in terms of just focusing on ridership, trying to gain some sort of share, stabilization, but also doing this profitably. Investors, I think this has been one where patience is worn thin. I think Lyft has gotten that sort of shot across the bow, and this is an important 6 to 9 months. This was the key quarter. If this was another disaster quarter, they would really have to seriously think about putting that for sale sign on the line.
The one thing that Lyft had always talked about when it comes to the kind of differentiating was this idea wanted to be kind of this everything transportation app where you can rent a bike, you can find transit options. Uber kind of went in a slightly different direction, embracing, of course, food delivery and some other areas here. There's been a lot of talk, or at least with Lyft, that some of the areas that it branched out to have become a bit more of a distraction than maybe some of the areas that Uber branched out to.
All right, Roman, I think that's the perfect way to put it. I think on paper they sounded great, but they took their eye off the ball, and that was a big issue for Lyft. Uber, I think, ultimately went after the right markets, and that's really been a massive success story. Now for Lyft, this is just to stay focused on their core business, gain share, do it profitably, and I think that comes down to this is a company that's been spending money like a 1980s rock star. If you look at the last year and a half, now they need to curtail a lot of that.